Ladies and gentlemen, people of the internet, welcome back to yet another episode of Crypto Over Coffee. I hope you're doing well today. In today's episode, I want to share an urgent warning to all the crypto holders out there betting big on a bull run, in addition to news about some altcoins like ThorChain, for example. We're also going to cover our usual 404 logic not found segment and a bunch more, so make sure you stick around for all the updates we've got in store on the show today. If you like crypto, please subscribe to the channel, hit the bell notification button on YouTube, or you can follow the podcast on your platform of choice if you're listening, so at least you get a heads up whenever I post new episodes of Crypto Over Coffee on whatever platform you use. And better yet, if you're a subscriber on the YouTube channel and you leave a comment on the video, you'll be automatically entered to win a random draw for a Keystone Pro hardware wallet. And finally, I wish I didn't have to do this, but just a friendly reminder, please be aware of scammers across all social media platforms, particularly on YouTube, that are impersonating me in the comments, sending messages, asking for money or personal info. I will not reach out to you. I won't ask you for money. And if you get a comment on YouTube asking you to contact me, please report it and know it is not me. So please be safe out there. Now, the headline of this video pretty much says it all. I've seen a huge uptick in the number of crypto personalities and influencers and even crypto media sort of pushing out the hype around a resurgent bull market for crypto, as Bitcoin, for example, moved back into the upper 40Ks and Ether crossed back over the $3,000 mark emphatically towards the end of March. There are certainly signals of strength in the markets as Bitcoin, Ether, and various altcoins like Terra have bounced off of new support after a slew of negative news this past week, showing a little bit of strength there, but there's still pitfalls that one needs to consider throughout this whole process. As much as I want a full-scale bull run for crypto, trust me, it's critical to be practical and understand the risks that are out there right now that could derail the entirety of bull run momentum, so you can protect yourself from the downside risk whilst also retaining exposure for the upside. The run from 43,000 to 47,000 for Bitcoin itself was sort of a perfect storm for the resurgence of the Moon Boys calling for a bull run and a return to all-time highs. I mean, I even saw people memeing 100K Bitcoin back into existence, which is a little crazy. Regardless of the positive conditions that have arisen with Terra buying up Bitcoin en masse and softening fears around rate hikes and their effect on the risk asset markets, etc., I look at the risks that we have right now in three major categories: macroeconomic conditions, whale activity, and regulatory activity. This past week, crypto's momentum was stalled and markets fell broadly as focus on unfavorable regulatory action in the EU Parliament and concerns around the Bitcoin CME futures gap seemed to shake the markets a little bit. And this could very well be a continuing theme, with regulation like that in the EU right now targeting private self-hosted wallets with KYC, striking fear into the crypto markets around the world, and not just in Europe. The other piece of this is the whales, which, depending on who you ask, are either a huge risk in the markets or a huge benefit in the markets. Frankly, I think whales can be both a risk and an asset. One whale decides to move Bitcoin onto exchanges and sell. That hurts, right? And of course, when whales buy, you see the opposite effect. And predicting what these whales will do is almost impossible. And when you look at whales and institutions, there's only a few things you can point to. And one of the things you can point to is macroeconomic conditions. And that helps you predict what they might do to an extent. And an acceleration of rate hikes by the Federal Reserve, for example, could push some of these sophisticated players increasingly out of risk assets like Bitcoin and crypto. So it's a fragile time for crypto right now, and that's the unfortunate truth, and something that you probably won't hear much of when the markets and when the players in the markets are feeling greedy like they have been. It's an important thing to balance the desire to capitalize on a bull market with the desire to keep hold of profits you've taken and keep liquidity for opportunities. So don't go flying in, buying the local top and get caught in another correction, right? That's the issue. That said, those looking at the long-term picture here should be encouraged by what we're seeing right now, even if the risks of retracement are abound in the short time scale. And why is that, right? Because despite the strength we've seen in the crypto markets, we're really, really early. A recent estimate by an NBC poll found that only 1 in 5 Americans is invested in crypto. And if you consider that number versus the estimated over 55% who invest in stocks, according to some studies I was able to find online, you'll see that crypto really hasn't hit that level of mainstream investment attention that stocks have, for example, and that's to be expected. But the demographics are also important. A large proportion of the total surveyed population in this crypto study showed that 18 to 34-year-olds were the primary crypto users or investors. And as these Gen Z and millennial generations become the dominant earners and investors in society, which is rapidly becoming the case as prior generations move into their late career and retirement ages, crypto could see a major boost in adoption and investment as those people come of age during cryptocurrency's existence and as they're searching for diversified investments for the long term. Of course, critics will always say that crypto is unregulated, it's for bad people, it's worthless, blah, 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 blah. But let's look back at the latest example of this type of investing trend, the dot-com bubble. There was hype galore, unclear regulatory environments, polarizing opinions, people didn't know what to think of the tech boom, and there was this huge reckoning that took a huge group of stocks, tech stocks, to a really small group. However, today, tech stocks and a lot of the industry players that grew out of that bubble are still here in a big way. Crypto is going to be the same, in my opinion. Few projects are going to survive, but they will bring to fore a massive industry that's not going to go away, not in the US and not abroad. Crypto is here to stay, and it will change the world much in the way the internet did. I truly believe that, or else I wouldn't be here week after week preaching the positive impact of crypto and trying to bring you a balanced view of what's happening on this show and on other shows that I do. The bottom line is this. If you're trying to figure out what to do in the markets right now, the biggest element of your plan should be understanding what amount of money you can comfortably risk during uncertain times that we are in. And we are in uncertain times despite the bullishness. And align yourself with cryptocurrencies that you don't mind holding on to long term if things go south in the short term. So make sure you're hedging your bets. And remember, this show is not financial advice. Please be safe. Now, all of you have been giving me great feedback in the comments that you want me to cover more smaller projects or just more variety in Crypto Over Coffee in terms of projects I cover. So I'm going to be focusing on doing just that. If you want me to cover your favorite project, please leave project names in the comments section, and I'll do my best to look through those and pick some out. So next up, I want to talk about a project that I haven't talked about much lately, but one that I'm a fan of in many ways, and that is Chiliz. And Chiliz is one of the major projects out there in the sort of fan token space, and one of the major products built atop Chiliz is called Socios, and that's been a mainstay in the football world. And by football, I mean soccer, of course, the real football. And people are going to hate me for that, but that's just true. Chiliz provides a platform for fan engagement for some of the world's biggest football clubs and players so that fans can participate more actively in their favorite clubs through fan tokens. That's all built in the Socios platform atop Chiliz. Now, Chiliz went through a rather rough patch during the last sort of bear market pattern that we've been in, but it's recently made a resurgence on the back of news about Socios landing a huge $20 million deal with Lionel Messi as an ambassador for the product, as well as news and announcements about a brand new version 2.0 of the Chiliz chain, the underlying blockchain network behind the Socios platform. So this new Chiliz chain version will bring to the fore an Ethereum virtual machine compatible network driven by network validators in a sort of delegated proof of stake type model. And this Chiliz chain 2.0 or CC2 network will go through a 6-phase testnet process before going into mainnet towards the end of this year. And it'll mark a new chapter for the project, allowing more direct participation from fans on the network and more opportunity for developers to build around the existing Socios platform for football club fan tokens and experiences. So this will be really interesting. I'll be in the testnet phases, sort of tinkering around, lurking, figuring out what's going on. Definitely something to watch. In other news, the self-described open source payment infrastructure project COTI, which still flies under the radar in many ways, for what reason I don't know, has announced its 2022 roadmap, and it's quite interesting to say the least. COTI's roadmap hinges heavily on the launch of a new technology layer that sits atop its main layer 1 trust chain network called the Multi-DAG 2.0. And this directed acyclic graph-based layer will be used to allow for the implementation of a scalable, low-cost stablecoin issuance and payment system that can be used by many different organizations. For example, this Multi-DAG 2.0 layer could enable large enterprises or institutions or merchants to issue their own USD-backed stablecoin to be used within that business process with its customers. Multi-DAG 2.0 is tentatively slated for a testnet this quarter in Q2, I believe, and it should launch into mainnet barring any issues later this year in Q3 or Q4. COTI is a fascinating project because it's so focused on an often forgotten area of crypto, payments. And competition with Visa, for example, is not easy, it's not an enviable task, and the regulatory environment around stablecoins is uncertain at best. So COTI is really pushing forward in a space that has high potential reward, but with significant challenges ahead. That said, COTI already has quite an ecosystem and following built up, and it recently announced a $10 million fund for development atop their platform and in their ecosystem. One project built in that COTI ecosystem has garnered lots of attention as well, and that's the Djed stablecoin that will be deployed to Cardano's mainnet to much fanfare later this year. The Djed stablecoin will enrich the DeFi ecosystem on Cardano significantly, which desperately needs stablecoins, and they already have partnerships locked in with several DeFi projects already. So keep your eyes on this popular stablecoin project derived from COTI here in this quarter. It will likely hit mainnet here soon, in my opinion. And next up, I did also want to talk about Skale Network. That's SKALE, and the testnet launch of its V2 product that will roll out to mainnet later this year. And for those unfamiliar with Skale Network, it's an impressive open source project that provides a multi-chain Ethereum compatible ecosystem for builders to develop NFT, DeFi, metaverse, and other use case based dApps, unhampered by poor scalability and high fees that come with the layer 1 Ethereum network. With Skale, developers can quickly spin up purpose-built blockchains for their decentralized applications that are Ethereum compatible and have unique features like on-chain NFT metadata and content storage, enabling builders to build quickly, but also deliver quality user experiences to their users. Now, while the existing version of Skale provided a mechanism to securely connect from the Skale networks, each individual Skale chain as they're called, to the Ethereum mainnet, there was no way to interconnect between one Skale chain and another, which is a major feature coming in V2, which I think will be a game changer for compatibility between each Skale chain and its subsequent deployed dApps. To ease the potential complexity and friction of this new interconnectedness between chains, there's also going to be sort of shared services like NFT marketplaces and DeFi exchanges or decentralized exchanges, and utilities like Chainlink oracles and graph data indexers within hubs. So Skale V2 is going to bring the concept of hubs, where these major integrations can happen a little bit more easily. So rather than Chainlink interacting or integrating individually with hundreds of Skale chains, it can integrate with a few hubs to cover more ground and provide maximum value for day one, and then do more bespoke integrations along the way. So really stoked for this new version of Skale, and again, really worth watching. And another big story of late has been the resurrection of ThorChain, the cross-chain DeFi powerhouse that provides ThorSwap, a decentralized exchange for cross-chain swaps of tokens and digital assets. ThorChain and its main services had a really rough time last year, with multiple high-profile exploits causing shutdowns, reworks, and relaunches, eventually with a full audit being required to bring everything back online. And this is really not all that surprising, because building a standalone network or dApp is hard enough, but the complexity and decentralized cross-chain interaction is not to be understated. It's a really, really tough thing. However, ThorChain's crew knuckled down, they accepted responsibility, and they did what builders do. They made a plan, they fixed the problem, and they executed the plan. And upon their return, ThorChain and its native token RUNE have made a major comeback, both in TVL or total value locked, sentiment, and functional value. And one big catalyst for growth has been the integration of the also surging Terra ecosystem into the ThorSwap platform, which has likely contributed to the aforementioned total value locked growth that I just talked about. Furthermore, there's now a roadmap here to implement more chains, more wallet support, and more features to enrich the experience of using Thor, and it's only going to reaffirm the optimism that the market is signaling for this project and what it has to come. So I'm really impressed with what I'm seeing so far in ThorChain's comeback. Long may it continue, and mad respect to the team for sticking with it, bringing this back, and doing what they've done. Now, before we dive into rational reactions, I also want to thank the sponsor of today's show, iTrustCapital. With iTrustCapital, US-based crypto investors can invest in crypto within their own self-directed individual retirement account, or IRA, allowing them to trade crypto in a tax-advantaged manner. For me personally, I've used iTrustCapital for a long while now to build a retirement profile of cryptocurrencies like Bitcoin, Ether, DOT, Atom, ADA, a bunch of cryptocurrencies that I believe in long term. Of course, you must note the high-risk nature of crypto investing and the specific tax situation you're in when considering this, so please seek a professional opinion in that regard. Those of you who want to sign up for iTrustCapital for a free account, you can also earn a $100 Bitcoin sign-on bonus after funding your account using the link in the description of the episode, either on YouTube or on the podcast. Now, it is time for Rational Reactions, which is a segment on the show where I read headlines from tech or crypto-related publications and give you my instant rational reaction to what that headline is saying. So let me switch over to the computer. We can go ahead and get started with these headlines. First story here. I always want to say question, but it's not questions, not yet. That's coming later, so stay tuned. The first story of the day is from Cointelegraph, and it's related to Zilliqa, another project I haven't talked about in a while, but still a fan of. Zilliqa's metaverse debut pumps ZIL price 350% in just 5 days. Sell-off ahead. ZIL's price rally has made the coin, quote, overbought on multiple timeframes, raising sell-off risks. Now, a lot of people have been asking me about this because I did make I think, a pretty good explainer on Zilliqa a while back. So people have come to me saying, hey, ZIL is way up. Should I be getting out, right? And I'm not in the business of giving you financial advice, but this is a great example of showing you what can happen with projects like this, okay? Zilliqa has done a lot of work on this sort of metaverse as a service. Like they've launched some really, really cool announcements here, right? And that drives a lot of speculation. So you see this huge price growth, 3 times over, 4 times over. And this happens a lot in this space when new announcements come. It's at this point in time when you see everyone at peak sentiment, everyone's stoked, everyone's greedy. This is the point at which you need to consider your plan for taking profits, right? I'm not saying just get out all the way, and I'm not giving you financial advice again, but this is a great example of how you can start to see the patterns in the market and see how things are playing out. And that's not to say taking profits means you don't like Zilliqa anymore. It just means that you have acknowledged the fact that you have a great opportunity to take some profit off the table and then keep a modicum of investment in it long term because you believe in it, right? If you're in it for a quick profit and maybe you don't believe in it, hey, that's up to you. But I wanted to first shout out Zilliqa, saying great job on this metaverse announcement that you made. You should look that up if you haven't done that already. But secondly, to use this as a point to drive home how you go about profit taking in this space and how you need to take the emotion out of it. Don't get greedy and think, oh, it's going to keep running. It's going to keep running. It's never guaranteed. So according to your plan, which you've talked about a lot on the show, maybe it's time to take profits. All right, next story is from Cointelegraph again. Quantum computers are many years away from cracking crypto. MIT Tech Review. I'm all for hope, and I'm a big believer in quantum computing as a potentially disruptive technology, said Sankar Das Sarma, but quantum computers are nowhere near being close to cracking crypto. Now, a lot of people shared this article with me because I've talked about in the past quantum cryptography being necessary, quantum safe cryptography, to protect against a future where quantum computers and quantum supremacy, meaning computers that can crack modern cryptography that underpins basically all of the modern internet and all of crypto. I've always been saying we need to be focused on building quantum safe cryptography standards. People sent this to me saying, hey, see, it's not that close, right? But here's the thing. When you buy a house in Florida, do you wait until a hurricane is right off the coast to start thinking about hurricane proofing all of your doors and windows? No. You get that done beforehand. You get that done at the very beginning. I mean, that's the whole key to this process, is to be prepared for what's to come and not to wait until it's a problem to start fixing the problem and start to be prepared for the problem. So that's what I'm saying here. Yes, quantum computers are a long way away. We know that. It's years away. But we should be preparing now and thinking about it now, and we are. But the process is not moving quickly enough, in my opinion. So I agree, we're years away from quantum computers, but we also need to be thinking about quantum cryptography standards today. All right, last story of the day is from CoinDesk. If money is speech, CBDCs, or central bank digital currencies, should be tools for freedom, examining the concerns a digital dollar could be used for coercion and censorship. Now, a lot of people would discount this opinion as potentially conspiracy theory-like, but the reality is it's actually not. I've said many times before that central bank digital currencies would not change the trust dynamic with the issuer of that digital dollar, digital euro, digital Great British pound, whatever it is. It would actually increase the need for trust in those institutions that issue these digital coins. Why? Because it gives them more power to, at the flip of a switch, move you out of the financial system if you are an undesirable. It gives them the ability to more readily maybe issue new currency, right? There are a lot of things that need to happen for a CBDC to be acceptable, in my opinion, and I'm sure a lot of people might share this opinion. This should be a tool for increased accountability and increased trust in the issuers of dollars and euros and pounds and other fiat currencies around the world, not as a mechanism to entrench power with the people that already have it, right? And that's the thing. So if a CBDC is used as a tool for freedom, if it's used as a tool to bring more transparency, direct governance of our financial system from the people, those of us who are a huge part of what makes our countries, wherever we live, successful and prosperous, if that's what happens, fine, I'll support it. But otherwise, I don't. So I think this is a really interesting opinion to read. You should also read the opposite opinion, people who think CBDCs should happen and maybe they aren't a tool for freedom. Understand both sides, but this is a great thought experiment. I think it's interesting, so I wanted to bring it to your attention. That being said, folks, let's go ahead and dive into 404 Logic Not Found, which is everyone's favorite segment. And I think I've got a pretty interesting one today that might ruffle a few feathers, but, you know, it's part of the job. Now, ladies and gentlemen, it is time for 404 Logic Not Found. And for those of you who are as of yet uninitiated in this little firecracker of a segment, I highlight notable tech-related fails or otherwise stupid moves in the world that need to get some attention. And speaking of attention, if you want to help this episode of Crypto Over Coffee get some attention from the algorithm robots, please hit the like button, get subscribed to the YouTube channel, follow the podcast, share it with your mom, your dad, your friend, your brother, your cousin, whoever it is. It tells the robots that control this whole game that you like the content, and others might also. So thank you for that in advance. Now, today's absence of logic centers squarely on the idea of one-coiners or tribalists who only value and own one cryptocurrency and hold it high above the rest and refuse to acknowledge the value in anything else. Now, I'll caveat this by saying I respect conviction, particularly conviction that's derived from actual analysis and fact-based reasoning. But in this type of nascent space, putting all your eggs in one basket is frankly silly to me. When I look at Bitcoin maximalists, Ethereum maximalists, Cardano maximalists, insert blockchain name here maximalists, what I see are people who are so ideologically and or financially invested in something that they believe evangelism and loyalty to that thing is enough for that singular investment to pay off. You become myopic to the fact that there are other things and that your thing might not succeed. Here's the thing. Despite what anyone says, underneath ideology, technology, and belief in the future utility of your favorite crypto, everyone in this space is driven by a desire to profit off of one or two or three or maybe more appreciations of value of their favorite cryptocurrency or cryptocurrencies plural. As early adopters, we're all in this space or this place where we may have gotten in really early on these cryptocurrencies. But here's the catch. So few of these cryptocurrencies that exist today will survive, let alone appreciate in value. So from that perspective, does it make sense to hold only one coin or to diversify your holdings outside of one coin in one ecosystem? And I think the answer is pretty obvious if you're really thinking about what gives you the best chance at profit. Now, don't get me wrong. By all means, hold the majority of your favorite ecosystem or coin because of that ideology, but acknowledge that your prospect of profit is now inextricably linked to the longevity and success of that ecosystem. Regulation, hacks, drastic change in market demand, the launch of a newer and better alternative technology to your favorite are only a few of the potential examples of what can shatter the future outlook for that crypto you hold. So holding only one cryptocurrency or only cryptocurrencies in one ecosystem can be a real Achilles heel if you really think about it. Without diversification, you're overexposed to a plethora of additional risks that are prevalent in crypto on top of the already significant risk of investing in crypto in the first place. So to me, being a one coiner or a crypto tribalist from a purely investment thesis perspective is a 404 logic not found. First, because it's very risky. And second, because it's really easy to hedge and fix this risk profile. For example, find a project that's adjacent to the ideology and belief system that draws you to the thing you love and invest in that alternative as well. Cardano and Algorand are a great example of this pattern. Both are based on very scientific and academic development practices. Both communities share a lot of the same ideologies, and both ecosystems are developing in ways that complement each other. So rather than investing in just one with everything you have on the table, why not diversify across those two? None of this is financial advice, as always, but I feel it's something that's apt right now to think about. And I don't know if you agree, so let me know in the comments or shoot me a tweet based on your thoughts there. All right, so let's go ahead and do some community Q&A to wrap up the show. I always answer questions from folks who watch the show, and I've got some questions from last week's episode that I'm going to answer. And I want to remind you that if you have a question that you want answered, leave them in the comments on YouTube or tweet me at Hashoshi4, and I'll get those answered as well. So let's dive into the questions. I've got them here on the computer. What do we got? All right, first question is from Bill J. Looking forward to the Polkadot episode. Yep, that's in production. Been really bullish for a long time on DOT, but it's becoming more and more discouraging when I hear silence about it from many sources. Any ideas on why it isn't talked about like some of these other more popular alts, listing Solana, Luna, Avalanche, ADA? So I think here's the thing. Polkadot is not very aggressive in marketing. And if you think back to the early days of Ethereum, where Gavin Wood, the founder, the sort of master brain behind Polkadot, that was not a marketing thing either. There was really not a lot of marketing. It was a lot of technical speak, a lot of white papers and yellow papers, and really, really technical stuff. The community was a lot of technical people, okay? And I think Polkadot's being built the same way. Polkadot is also very, very complex, right? It's very complex. And so when you have something that's very complex with not a lot of marketing, and not a lot of oversimplification, you have what we have today with Polkadot. I believe it's one of the most promising projects out there today, but you don't hear a lot about it because it's very complicated. There's not a lot of marketing. There's not a lot of hype. And to an extent, I think some of that's purposeful. I think Polkadot doesn't want a lot of that hype. They may actually probably not want DOT to grow in value so quickly because of the bonding and leasing process for parachains. So I think that that's a big thing that you have to think about, is that if you believe in the technology and you believe in Polkadot as a utility, as a platform, then by all means stick with it. But if you're looking for it to be marketed like Terra is, like Cardano is, like Solana is, you'll be disappointed, at least for now. And maybe that changes in the future. That's just my 2 cents. Thank you for your question. Next question is from iCust007. Trying to understand something. Where do you see the utility of ETH versus ADA, or are each a leverage financially? So I think for me, Ethereum will almost invariably always be a platform that has a firm grasp of DeFi and NFTs in its own right. It may not be the king forever. I see Cardano as a platform that's going to sort of be a bridge between a lot of the traditional finance ecosystems and even to an extent some of the like identity and traditional like public services that you see, especially in foreign countries around the world. Given the focus on Latin America, which they should double down on Africa, other places. So I think that they're going to start to deviate in terms of the target audience, the target group. And they're always going to be fundamentally different than each other in how their networks are constructed and the development thesis and structure behind them. Cardano is always going to be the sort of move slower, change less often, but do so in a way that's very stable, focused on stability, predictability, academic research. That's where Cardano is going to land. Ethereum is going to be move fast, break things, build the newest stuff as quickly as possible, learn from failure, move fast. It's always going to be different. And so to me, I like both approaches in many ways, and there's a time and place for both. So I like both. I invest heavily in both. That's just the truth. That's how I feel about it. And then another question, actually, this is also from iCust007. Thank you for asking more than one question. I didn't even notice that. Why, as a developer, do you like the programming language ... Okay, so I'm assuming you're asking, like, what do I like? I started my career, I started my education first teaching myself JavaScript, and I started a little bit with C, okay? I ended up sticking more with JavaScript because I was able to work and use that more readily, right? So I was able to do web development, right? That was very easy for me to do. When Solidity came into the picture around 2015, really-ish, give or take, as a functional program, or as a functional, as in working programming language, it's an imperative language, not functional, but as a programming language that was available to use on Ethereum's network, I started to learn that as well. It was a little hard for me to grasp at first, but there were some similarities between what I already knew and that. My knowledge and the way I learned Solidity was all sort of just reading online, right? And just learning by making mistakes and figuring stuff out. And over the years, I've picked up some more knowledge from other people who are way better than me at developing with Solidity. I've stuck with JavaScript, so I still use that. TypeScript, I also really like. I actually like more than JavaScript. It's just a little bit more intuitive to me. But I still also use Solidity fairly often. I'm not as adept with some of these other languages. A few that I have on the list to really get proficient with. Go, I really want to get proficient with, and I've started working on, but I'm not to the point where I can function super well with Go yet. Rust, I'm really interested in. Kind of a tough language to learn. Really interested in that. And then, of course, finally, sort of a fringe goal for me would be to learn Haskell, because it would let me build on Cardano more readily. But with Milkameda in the sidechain space in Cardano, I can write in Solidity, so maybe I don't necessarily need to learn Haskell. There's my idea. If I had to say languages I'm most comfortable with, it would be TypeScript, JavaScript, Solidity, and then moving out and into other things that I'm learning right now, Go, Rust, Haskell. So that's my perspective. So thanks so much for watching this episode. Thank you for asking questions. Thank you for leaving comments. Please let me know in the comments what videos you want to see on the channel, what projects you want covered more. I really want to focus on making this channel better for you. So thank you so much for that in advance. Hope you and your family have a wonderful weekend and week ahead. And until next time, cheers.